Today's cherry bomb is a short call vertical in GLD, an ETF that tracks gold. It has 4 stars of liquidity, according to Tastyworks, and an IV rank of 37. But what I think is more telling than the IV rank is the IV percentile, which is up in the mid-60s, which tells us that the majority of the days in the past year have had lower IV than currently. So if you want to profit from possibly a downward move and a contraction of volatility in GLD, then today's cherry bomb might be for you. Hi everybody, it's Neil here again with Option Theory. It's August 11th, 2020, and we're ready for our cherry bomb trade, our first one of the week. Love it when that comes in, right? I get excited to see that. I hope you do too. If you're new here and you're not getting those emails, head down to that description. You'll find a link to go over and sign up for, what would be good? I put this on, right? How about that? There I am. If you head over to that link, you can sign up for Tasty Trades email blast. Tom Preston will send out 4 emails a week, and 1 from Tom Sosnoff on Mondays, which is always inspirational, motivational. They go over things that I don't go over in these videos, so you definitely want to head over and subscribe that. And while we're talking subscriptions, my last little plug is these are time-sensitive emails and trades, so consider hitting that if you like this and you want to build out a portfolio of cherry bombs, or even just test out your, option trading skills in a safe environment, right? Then this is the channel you want to subscribe to. Hit that subscribe button, ring that bell. You'll be notified when these videos come out. All right, I've done that. Now let's move on to putting this trade on. So we're going to go over to this Analyze tab. Make sure that GLD is typed in here. And we're doing a short call vertical. We're going to be in the September 25th weeklies, and which I know if you're like me, you hear about weeklies and you're not that excited because usually the liquidity is blech, right? GLD is very liquid though, so we'll see what we're looking at here. With 45 days left to expiration as of today, August 11th, right? We're going to be on the call side, and over here at the 195, we can see here we got 10-cent wide bid ask, which is not horrible. For a weekly, that's pretty good, right? So I'm going to left click on the bid for the 195. I'm going to hold down the control key and then click on the ask for the 197 to build myself out a, now I let go of the control key, right? To build out a $2 wide vertical spread, right? So it's a credit. We're getting 60 cents for, which is close to that 1/3 of the width that we'd like to stay with the Tasty Trade approach. Now, I don't think we're actually going to get filled on this particular trade at this price. My reasoning for that would be that look at the gold futures overnight here. We're down pretty close to 2%, right? So that means that we're probably going to see a gap down, and then the value of this call spread will drop as well. So had we sold it last night, that'd have been pretty cool. All right. But anyway, that means although I'm getting ahead of myself, an alternative for this would be if you're looking to follow that 60-65 cent 1/3 of the width mechanic, you might have to adjust your strikes down from 195, 197 down maybe 193, 195. I'm not sure, but you'd have to test that out. But we'll set this trade up the way it is in the email and see how that works. And if we get a chance, if you're like me and you're at work during lunch, you check your trades, see if they filled. That's kind of nice, right? If you get that luxury of doing that. But we don't go into any trades not knowing our max risk and our max profit. So I'm going to go over here to this risk profile button, give that a click, and we're going to set the date up here in the calendar, which I set my font size to be bigger to make it easier for y'all to see. So I want to see if I can, yeah, that doesn't work out all that great. So I'm just gonna have to type that in, 9/26. Normally there's a calendar button there for you to hit. So I'm gonna do this, not 8, 9. And I'm hitting all sorts of buttons that might make things show up on my keyboard, so, or might show up on my screen. So I apologize if things have been showing up on your screen. All right, cool. There we go. See, look at that. I'm dealing with technical difficulties while we're on the screen. All right. So now we can see here that this expected move is here. This is where the current price is. And I'm going to set the slices over here to breaking even at expiration. And we can see that we're looking at a good 70% probability of profit, or breaking even or better, right? So that's good. And if you were to pull this up, this email up, you'll see that the P50 is even better. It's even closer to 80% probability that we'll collect half of this credit. Yes, I know $30 is not an exciting profit, but it's a little different than a lot of people think about trading options, where they want the small risk and big possible rewards, right? Usually to get that, the probabilities work against you. So you want the higher probability of making money, right? I think you do. I know I do. All right. So with that, we understand our max profit is $60, though we're looking to manage it at, or take it off if we get to $30 of profit. Now we go to our max risk, of course, is $200 minus that $60 credit, or $140 of risk. Okay, so I'm going to right click this trade. I'm going to choose confirm and send. Everything we just said about profit and risk is right here. And then we're going to hit send, put that over into our working orders, and keep our fingers crossed that we don't have to adjust this, right? But you can see here, I don't put too much weight in any sort of technical analysis here. But if you did, and you use these particular, tools, you could see here that the bands are widening, right? Which means it's getting to be a good time to do short premium. The fact that we've hit this upper band is a bearish signal. It looks like our, we're about to cross over here. And this one here is definitely above this line, which indicates overbought, right? So there are some pretty good bearish signals here. How much weight you put into that is up to you, but I like to put the weight of probabilities. Of anything, that's my favorite thing. All right, so with that, I thank you for joining us. If you made it this far in the video, major high fives. I appreciate that you helped my watch time out. You know what else would really help too? Would you mind, or maybe think about hitting that that like button and that subscribe button and ringing that bell if you haven't done so already. Those are really nice if you could do that. All right, so until tomorrow, I say be trading.